Alright guys, today this video is going to be made to talk about the history of taxes. And I know that sounds really exciting, right? Ooh, the history of taxes. But if you're somebody who wants to have more money later, you're going to find this very interesting. And if you remember, I did a video last week about how do you know if you're really wealthy? And a lot of people messaged me or emailed me and they were really surprised because they didn't realize how low so many people's income was and how high their income was in comparison to everybody else in the country. I think you're going to be surprised by taxes as well. So we've only had taxes a little over 100 years in this country. And we're actually at one of the lowest tax rates ever. Now, here's my question to you to start with. Do you know what the lowest tax rate is? So what's the highest that somebody in the bottom of income guidelines would have to pay in taxes ever? Well, the answer is 40%. That's right, from 1942 to 1956. The poorest, the lowest of income earners had to pay 40% in income tax. And then from 1956 to 1962, it dropped to 26%, which is still pretty high. And then 1963 to 1981, it hovered right around 20%. So that means for 40 years, the lowest tax rate was between 20 and 40%. Now, I know a lot of people today who would kill to get down to 20%, and that was the bottom of where people had to pay. Now, since 1982, the tax rates have gradually gone down. And of course, we all know the principle that what goes up has to come down. Well, when it comes to taxes, what goes down most likely will go up. And I've yet to talk to anybody who doesn't think income taxes are going up. And if you look historically, they have to go up. So that's the lowest tax rates, hovering between 20 and 40%. Well, what were the highest tax rates at? You'd be surprised. So the highest tax rate ever was between 1942 and 1963. And the top earners paid around 90%. You don't need to adjust your speaker. You heard me correctly. 90%. And then from 1964 to 1981, the top earners in our country had to pay 70% in income tax. So that means the average for 40 years was around 80% in income tax. That's mind-boggling. If that happened today, people would be going nuts. Like, oh, you can't do this. Because today we are historically at really low tax periods. So what does all this mean? Well, one, it means that before 1942, rates were actually similar to the rates today. And then they drastically went up. And they stayed up for a while, and now they've come down. Well, why did they go up? They went up because we had a war. They went up because we were building infrastructure in our company, and we had lots of expenses. Well, now we're at a point in our history where we have a huge national debt. We could have a war or two, and we have an infrastructure that's now crumbling. And so we need a lot of money. And so chances are, if we need a lot of money, where is the government going to go to get that money? They have to start looking at taxes at some point, which means taxes are going to go up. Now, I'm not saying this to bum you out. I'm saying this so that you can prepare and plan correctly, because so many Americans are putting their hard-earned dollars into things like qualified retirement plans where they're getting what they call a pre-tax benefit. So they're putting that money in and they say, oh, it's tax deferred or tax free, but it's not tax free, by the way. It's just tax deferred. And when you get ready to pull that money out, when you want to ready to live on it and use it, that could be 10, 20, 30, 40 years from now. Well, from what we just saw, taxes could be a lot higher. You know, they say that if you don't know history, you're doomed to repeat it. Now you know the history of taxes. Now you know that taxes could go up drastically. A lot of people don't really remember, because they weren't alive, that taxes were ever that high in our country. But they were, and they could easily go back in the future. In fact, we've had a lot of politicians lately arguing for taxes that high because they say we need the money. Well, if they do that and your retirement is dependent upon what a future tax rate is, you're screwed. What they used to say, you're up a creek without a paddle. Now, unfortunately, the financial industry isn't really telling people this. Nobody's telling people this. Your CPA is not telling you this. She or he is only looking at 1 year at a time. I'm telling you this. And I'm telling you this because you need to be prepared. You need to know, where can I put my money where I don't have to worry about what the future tax rate's going to be. And you also have to be careful what you hear. I was in a networking meeting with a lot of business owners last week, and I heard a financial planner stand up, and this is what she said. This particular financial planner has been in the business 30 plus years, very trusted. I know her. I like her. She stood up and she said, encouraging small business owners to start 401ks, and said, your money's going to grow tax-free and you're going to pull it out at a lower rate. And when I heard that, I was like, did she just say what I think she said? You got to be kidding me. That's so wrong. But nobody in that room knew any different. Well, one, your money doesn't grow tax-free, it grows tax-deferred. That's a huge difference. Because not only are, as I've said before, not only are the taxes deferred, the tax calculation is deferred. And that's huge. But you don't necessarily pull it out at a lower rate. She has no way to know what the tax rates are going to be in 20, 30, 40 years. So by saying that, she gave people false hope. Now, the truth of the matter is, as we just saw with the history of taxes, chances are you're going to pull it out at a much higher rate. In fact, the IRS says that retirees, 85% of them are in the highest tax bracket that they've ever been in. Well, why is that? A lot of people think, oh, I'm going to make less money. Well, one, let me just talk about making less money. A lot of people say you'll make less money in retirement. I don't believe in planning to fail. And that's what that is, by the way. If you go, well, I'm going to make less, I don't know about you, but I want to stay at least at the level I was when I retired or when I decided to switch careers. I don't want to plan to fail. But let's just say that you do make less. You also, in most cases, have less deductions. The kids are gone, the house is sold, the business is sold. All of a sudden, you don't have all those deductions and your tax rate is higher. And that's why the IRS says 85% of retirees are in the highest tax bracket that they've ever been in. So the chances are you're not going to pull it out at a lower rate. You're going to pay more taxes on it, even though you were told you might pull it out at a lower rate. This is why the history of taxes is so important. This is why we need to know these hidden truths that are right there in front of us. Taxes most likely are going up, and they're going to go up a lot. Are you prepared? If not, give me a call. We can talk about ways that you can make sure that your money is protected and off the radar screen of the IRS for income tax purposes.